Hey traders, Mixer here. I want to wish everyone a happy new year. Hope you guys had an amazing 2022. I know that for myself, 2022 was an extremely busy year for myself. I was in Europe for a couple of months. I was traveling all around, and it was a very, very interesting, volatile stock market with so many things going on in the world. Unfortunately, the sad thing in regards to the Russia-Ukraine situation, and obviously the volatility and the stock market crash in 2022. So, what I want to do today is give you kind of my 2023 stock market forecasts in terms of where I see the markets. And more importantly, what I'm going to do is I'm going to take a look at the charts and tell me what we plan to see or what we are seeing in the new year. So let's get started. All right, so just a disclaimer in terms of anything that I discuss in this video, please make sure that you consult your financial advisor before making financial decisions. All right, let's get straight to it. So what I've done here is I've over the holidays I've been kind of just doing a lot of research. Been looking at the charts, been kind of seeing what are the charts telling me, what are the fundamentals telling me, and what I want to look at is we are still in a bear market. All right. We'll take a look at the charts later, but we still do not see any type of recovery. We still see a lot of downward movement in the markets. We still see the fundamentals in terms of the economy slowing down. We'll talk a little bit about this next. Is we are still seeing interest rates going to be rising, and also inflation going to be a concern. So does that mean that 2023 is going to be as bad of a year compared to 2022? We don't know exactly yet, but I can tell you that we are still in a bear market. So I want to take a look at some charts with you, and let's take a look. All right, so let me switch to a chart here. Oops. All right. So this is the S&P 500 chart, and you can see right at the beginning of this year we were the peak right in January. And then we broke this uptrend here in the third week of January. And ever since then, the reason why I see that we are still in a bear market or downward market is if we see highs here, highs, lower high, lower high, lower high. So every time that we are trying to make a new high, we fail. So this is one of the indicators. And also you can see in terms of lows, every time that we go low, we go lower, right? Lows, lower low, lower low, lower low, lower low. So we saw right here, December 13th, tried to break above this resistance line here around 4,100. And again, I was talking to many of my students. 4,100 is a key level on the S&P, and it couldn't break. And then soon after, Fed Powell had the FOMC meeting and basically said that from a very hawkish stance, that interest rates aren't going to stop rising, inflation is still a concern, and therefore the market sold off. Now we are essentially, holiday season, late December, right? Very, very choppy markets. So, sorry, hang on a second, guys. So we are basically right in the middle here. And the next key level in terms of having it to really break above, because you can see we're basically in this downward channel. So it doesn't look like we are going, or I mean, doesn't look like we're breaking out of this channel here. So the key aspect that will tell me that we may be out of a bear market is if we can break above 4,100 and then target towards 4,300, then we might have a chance again. I highly doubt that 2023 will reach back up to the 2022 highs. Okay, probably, in my opinion, is going to be very, very low. So my thoughts in terms of where we're going, the state of the U.S. stock market in 2023 is we're going to have another volatile year. We're not going to stay, stagnant. There's going to be obviously events that will cause the market to go up, and then there's events that will cause the market to go lower. So my thoughts is that we're going to be range bound. Okay, range bound this year. Now, it doesn't necessarily mean that there's not going to be a lot of trading opportunities. There will be. I think that continued volatility will be standard in the US stock market. Now, I want to take a look at a weekly chart, and I just want to show you that the reason why I think that there will be continued volatility is you can see here, this is a trend line that I drew all the way since 2009, okay? This was during the financial crisis, and it took many years for it to recover back. And you can see that we've been basically on a straight line up since 2009, okay, straight up. And then look at this, right? Since the 2020 pandemic, we've been straight up, and then we've been seeing volatility. So one of the factors that I see in the bear market is volatility, okay? In a bull market, you can see very, very straight upward trend, right? Just in one direction. That's a bull market. In a bear market, we have obviously a downward market, but volatile, right? You can see up and down, up and down, up and down. So you can see continued downward movement. And that, therefore, you can kind of see here, there's this trend line right here, okay? So there's a possibility that we may go further down, a lot further down, right? To test this trend line right here that has been basically in effect since 2009. So I am not ruling out a major or possibly even another stock market crash in 2023. Okay, we'll have to see what is the trigger, what is the event. We don't know, right? I can't tell you what that event is, but you can see just looking purely at the charts is that we are in a downward channel, right? This is a weekly chart. Very, very clear. Very, very clear. All right, so let's go back to the slide here. Hang on a sec, guys. All right. Okay, so sorry guys, there you go. So the interest rates, okay, let me actually talk about the interest rates. Let me actually go back to this chart here in terms of interest rates. Okay, so this is a chart of the Fed funds rate. The Fed funds rate is essentially an indicator of where the interest rates are currently right now and headed towards. So you can see the interest rates Fed funds rate hit a peak in 1980, okay? And I remember this very, very clearly. Interest rates were above almost 20%, okay? Since then, we've basically been going down, 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 down. And what I want you guys to look at, and some of you guys have never really seen high interest rates, okay? Especially, we have not seen high interest rates since 2009 very high interest rates. We've been basically zero, okay? Or very, very close to zero since 2008. Okay, that was actually at the beginning of the financial crisis. And the Fed started raising rates 2017, right, 2018, but then abandoned the idea because the economy wasn't doing well. Okay, went back to zero, and then COVID hit, and then it's only been essentially beginning of last year that the Fed has aggressively raised rates. And you can see it here. This is the reason why the markets have fallen, is look at how sharp interest rates have risen. And one of obviously the biggest concerns is inflation. Okay, inflation is a big concern. So therefore the Fed is forced to have to raise interest rate to rein in inflation. Okay, so the suggestions with Powell's December FOMC meeting is that he's hawkish. He's going to continue raising rates, and he's already kind of indicated, and this is why I kind of drew a line here, is we probably have a few more rate hikes in particularly in 2023. So we're currently at 4.5. The target probably for them is 5.25. So we are about 75 basis points um, targeted. So if the Fed is going to raise rates 25 basis points or 50 basis points in the next Fed meeting, we are on track to reach this 5.25, 5.5 Fed funds rate. So that's why the market is a little bit on the cautious side, just because rates are still rising. You can see it has not plateaued. Okay, once we see some stabilization in terms of rates not really going up, stabilizing, then we may see the market perhaps go up. But as of this point, you can see here, interest rates are going to be a concern. All right, so let's go back to the slide here. So what do we do? Okay, we are in a bear market. What are the sectors that we can focus on? So the four sectors that I see that are still quite or are still doing quite well, and typically perform quite well in a recession, is four sectors that I see opportunities. So oil is still a sector that is, um, I mean, you can see it in the gas pumps. You can see it in in the markets. So oil prices have definitely shot up due to the Russia-Ukraine war. It has come back down, and again, I'll show you some charts to tell you why I think that oil prices could go higher this year. Also, healthcare. Healthcare is a big area of focus. Particularly, the population is getting older, so there's demand for healthcare. And obviously, with the pandemic, there has been a big focus on investments in the healthcare and pharmaceutical industry. The third thing is utilities. Now, utilities is an industry that performs quite well in a recession. It's typically a sector that pays dividends and is a very stable cash flow type of business. So that sector has been doing quite well. And then lastly, consumer staples. Again, consumer staples is everyday consumer products that are things that you buy, whether it's a recession or not a recession. So companies like Walmart, companies in terms of grocery retailers, supermarket chains, those type of things have done extremely well, because no matter how bad the economy, no matter how bad the stock market is, everybody has to eat, everybody has to buy those consumer staple items. So let me go through a chart here and I'll show you what I mean. All right, so let's go and take a look at oil first. Okay, so here is a chart of oil. Now this is a monthly chart first. So I just want to show you a bigger picture. So you can see here it hit the peak in 2008 after financial crisis, fell sharply. Same thing here. Oil basically became negative in 2020 and basically skyrocketed and went up due to the Ukraine war. And ever since then, you can see that it has been kind of pulling back, but you can see overall it's still up. Now, if I were to go into a daily chart, okay, this is usually the chart that I take a look at. You can see 2020 skyrocket went up, and now we're basically stuck in this range. Now, oil is an asset that is very, very volatile. You can see here, it can go very sharply up or go sharply up and then obviously go down. So we're stuck in this range right now. Okay, currently it's right now about $80 per barrel. And watch out if we break this $84, $85 level, and it's going to target 94 here. Okay, so that's why I see oil prices are kind of stable right now. You think they're kind of going down, but once we break this trend line here and once we break above 84, 84, 85, we'll probably go higher. Now, the reason why I am bullish on oil, if I take a look at one of the major ETFs on the symbol XLE, these consist of the major oil producers. You can see there is no downward market at all. It's basically been going up ever since 2020, right? The lows. And then here, 2021. You can see here I drew a trend line. It's been going straight up. Okay. And it tried to break out here, new highs in mid-November, pull back, but you can see here, this is also a support level I drew here. Broke support, now it's testing resistance. So I hope that, I mean, if there's our opportunities, I hope that XLE can come down to here. Come down to the $75, $76 price level. That would be a good buying opportunity because ever since then, it's every time it comes back to test this trend line. So that's kind of what I'm watching. I'm not looking to buy right here because there's not a lot of reward to buy here once it breaks above this level to target here unless it can go much higher. But if you can see, the highs are in 2014, so the target price probably is about 100. So if I were to buy here around 88, the risk reward's not that great. I prefer if we can come back down to this trend line right here around 76. I can look at buying it and then and riding it all the way up to about 100. So that's where I see oil, or especially oil producer companies, it's still in the bull market. So there's opportunities there. The other one is the healthcare sector. The symbol is XLV. And look at this chart. Okay, look at this monthly chart. There has not been much decline at all. Okay, and it's facing some resistance right here. So healthcare has been performing really, really well. And if I were to go to a daily chart here, okay, it's just basically been going trading sideways. Okay, if we were to extend this line here, it's basically been trading in a range from 120 to 144. So the opportunity, we have to be very, very patient. If you are looking to buy, wait for it to come back down here. So wait for some type of a market correction for prices to come back down here. Okay, so then therefore, if you can get right here, it'll bounce back up here. So there is a good potential trading opportunity. And obviously, if it broke here, then you get out. But that's why it's been trading in this range for the past year and a half, and tells me that possibility of holding this level of support around 120. Okay, the next one that I'm going to talk about is the utilities. Okay, utilities is XLU. Okay, so let's take a look at a chart, a monthly chart, and you can see why. Okay, utilities are a very, very stable type of investment because we all need electricity. So we can see it has not really gone down much. Basically, the only time that's really gone down much is in all markets. Financial crisis here, 2008. COVID pandemic, 2020. And ever since then, it's basically been on upward. Okay, you can see very, very clearly if I do this trend line here. So the way to buy this, similar to what I said for the healthcare sector, is, or in all sectors, is wait for the pullback. Okay, wait for it to come back down before you can get in. So if we were to, let me draw this trend line again. Okay, you can see this trend line has been in existence since 2016. Extend all the way up. Hit here, October 2022. So we have to wait. Okay, doesn't make sense to buy here because, well, you're probably looking at a 10% upside here. It's currently $70. 78 is a level of resistance. So there's a 10% upside. But then there's not any true support really until about 62 here. Okay, now there's obviously some support around here, but for XLU, wait for it to come back down lower. There might be opportunities there. And the last one is the consumer staples, XLP. Okay, let's take a look at it from a monthly chart again. Since 2009, has been on a rocket ship just in one direction. So we extended out. I'll do this a little bit differently here. Okay, so let's take a look at a daily chart. Okay. So has consumer staples, okay? One of the big components of this ETF is Walmart, okay? So it has faced this level of resistance around 77, but, and if it were to break, target will be 81, so not great risk reward. Wait for it to pull back. Okay, I know all you guys, will want to get in some of these sectors, but you got to be very, very patient. Patience is one of the most important trader skills. You got to wait for it to come back down again. And again, I'm only talking about sectors that are essentially have been in a bull market, and in a bear market, you cannot chase. Okay, and I'll talk a little bit about how to trade a bear market. But for XLP here, wait for it to go back to around 68, 67, 68. All right, so let me go back to the slides here. Okay, the next thing I want to talk about is the crypto market. I haven't done any videos on FTX because there's so many videos out there about it. My take, obviously, I'm watching the same news as all you guys are watching. Is it sounds like it is a massive fraud on the scale of a Bernie Madoff type of scenario. So, with that type of uh, huge negative headlines on the crypto industry, and again, I talked about this in my videos. We are in for a long, extended crypto winter. I do not see the sector recovering um, much in 2023. The fallout with the FTX, with so much required regulation in the industry, uh, basically people are cautious. People, the hodlers, who refuse to sell, probably are hurting, or some of them probably have sold for pennies on the dollar. So that sector is wrecked. I don't see any type of recovery. We may see that in 2024. We will see some upward, up and down movement, but I still see further downside in the crypto sector. So let me take a look at some charts here for you. Okay, so let's take a look at. So this is a chart of Bitcoin. Okay, we'll start off with a monthly chart. So after hitting a peak of over 68,000, we essentially have gone down dramatically. Okay, we're currently at 16,000, and some of you may have heard me say this. I think we're heading to around 12,000. Okay, I think we're heading lower before we head higher. So let's take a look at a daily chart so I can show you why. So there is some support right here around 12,000. Okay, right here. Okay, and the reason why I say this, look at right here. So crypto back in 2020 had a hard time breaking about this 12,000, around 12,500. Okay, 12,500. Tried, and then finally it broke in October. And then ever since then, it basically has been on a rocket ship, right? Up higher. So my guess, we've broken through a lot of key support levels. Okay, it broke just 30,000 level. Okay, there's some support right here. Then it broke around 20,000, and then again a key psychological level. And then we broke this around 17 to 18,000 level, which kind of been stuck in. And if I can clearly draw, right? Highs, lower highs, lower highs. So every time it tries to go up, it cannot go up. And my thoughts were before the FTX situation that we were holding this 18,000 level. Look at this, holding this level. Was really trying to go and stay above 20,000, and then you have FTX just basically end that. So we've been basically going sideways right now. The level of support right now is around 15,000. Okay, there is some support here. It has hit this level twice. My guess is it will try again, come back down. And if it holds, great. But I don't really have much confidence that it will go up much more. You can see very clearly. Like I said, you just have to take a look at the chart so you can see that it's bad. So if it can't hold 15,500, this level here, We're going down to 12,500. Okay. I'm going to last point I want to talk about is how do you trade this market? Okay, so Mike, you said this is a bear market. I mean, it's not looking great. How do I make money? Okay, so two things. One is play the volatility. There will be lots of opportunities in 2023 to play the volatility on the upside, and I'll talk about this in one of my next videos. Is there is lots of money to be made in a bear market by buying stocks. Okay, you can see here we've been in the bear market. It has gone down, but it has gone up. It has gone down, it has gone back up. It has gone down, it goes up here, right? Down, up, down, up. So you need to know where there is some support, because when support holds, it will go up. Now, I'm not saying that it will go up and reach all-time highs here, but there is opportunities to play the volatility. And part of my weekly live stream series, every Monday, 10 o'clock Pacific Standard Time, I'm going to share the ideas that I'm playing. So I will let you guys know some of the stocks that I'm buying and the stocks that I am shorting. So the second way to obviously play this market is to wait for stocks to go up to a certain level. Can't go any higher, you short them. Okay, you short sell the stocks, so you sell those stocks. Now, for those who don't like shorting, you can buy the inverse ETFs. The inverse ETFs go down in value, or sorry, go up in value when the market goes lower. So I'll be sharing some inverse ETFs that I will be playing as well, and you'll be able to follow along. So the way to play this market is there are lots of opportunities to trade, and the opportunities is not where you buy the stocks and you hold. You buy, hold for a bit, and then you sell. So that's the way to make money in 2023. There is going to be lots of volatility, and as traders, we thrive on volatility. And that's why, it's a great market for traders. It's a terrible, terrible market for an investor. But if you are an investor, watch those sectors that I talked about. Wait for them to come back a little bit lower before you get in. All right, so I'm going to end this live stream. So there's going to be a lot of content, lots of great videos that I'll be releasing this especially in January. And let me know what you guys think of that. And just to kind of just let you guys know, so there's going to be 4 videos per week that I will be releasing. So I'm going to be doing a live stream every Monday, giving you guys stock market ideas, stocks to buy. I'll give you kind of my take on the overall market so you can follow along. That's on Monday. On Wednesday, I'm announcing this new series on how to trade like the top traders in the world. And I will break down their specific strategies. I will show you exactly what to do to replicate these top traders. And I'll share specifically 1 or 2 strategies that you can implement right away in your trading. So I hope you look forward to that. I'm really excited about that series because many of you guys want to learn from me, and who better to learn from some of the top traders in the world and try to basically follow along exactly their trading strategies and their trading style. The other thing is the top trader profile video series, where I profile these incredible top traders and show you how they made their money in the markets. Okay, so I know a lot of you really love my top trader videos where I profile new successful traders. So that series is coming back. Okay, so those videos come out every Friday. So every Friday, I will upload a video um, documenting the successful traders and tell their story about how they made their millions or even billions. And then lastly, every Sunday, my weekly trader psychology live stream series, okay, where I help you with the mental side of trading. Again, that it's a topic that I am very passionate about. So this coming Sunday, I am going to talk about how to help you achieve your 2023 trading goals. I'll not just talk about how to help you achieve it step by step, but I will help you with the psychological aspect, right? And I just read a survey that only 8% of people who write down or who have their New Year's goals actually achieve them by the end of the year, right? Only 8% achieve them. So, what's the reason why people can't achieve that? And I'll talk about that in my live stream series this coming Sunday, 10 a.m. Pacific Standard Time. So, I'm very, very excited. So, lots of great stuff for you guys, especially in January. So please feel free to take advantage of this content that I am producing. All right, so just have a few look at the question box or chat box here. So Happy New Year, Dennis. Happy New Year, Richard. Um, yes, Peter. I love volatility. Yeah, volatility is. We need volatility, right? Volatility is king in trading. Happy New Year, Sunil. All right. Then says, do you think FOMC will keep QT until they reach the levels of 2008? Uh, I assume you're talking about. Let's take a look at a chart here. So if we look at interest rates. Okay, you can see here, that's where I was targeting, 2007, 2008. Okay, that's where we hit peak Fed funds rate, 5.25. So that's where I think the Fed is going to target. And who knows? It's going to be essentially how they look at the data in terms of inflation. They obviously don't want to kill the stock market, but they can't let inflation run wild. And there's lots of conspiracy theorists out there, that we could reach up to here, right? This is hyperinflation, and again, I remember those times where interest rates were 20%. So it was a very dire time during that period of time. Okay, then it says, any chance USD in Forex will be correlated with the market? Yes. So if we take a look at a US dollar index, so generally the US dollar is correlated with, in terms of fear in the markets, right? People, if there is global tensions all around the world, people go to the US dollar as a safe haven. So if we were to look at this from a monthly chart, again, you can see the US dollar has been in a bull market ever since 2007, 2008. We have seen a bit of a pullback, but my thoughts, if we look at the chart here, it broke this level here, short term. Now it's heading towards this trend line here. So my thoughts are, I mean, sure, US has been printing so much money since the crisis. It should come back down, but it's still the strongest currency in the world relative to other currencies. So my thoughts are, if you look at the chart, is we are heading back higher in terms of higher US dollar. Elias says, what day you said you were showing the stocks? Every Monday. So these live streams, I'll be talking about the markets and giving you my trade ideas. And then Stephen, Happy New Year. All right, guys. Okay. Thank you all for attending these live streams. So again, please let me know, you know, what you want to cover in some of these live sessions, especially on the stock side. And I'll leave some time on these weekly Monday live streams for you to ask. Okay, hey, what do you think of this stock here? What do you think of this here? And I'll be able to do my analysis and let you know my thoughts. All right, guys. Thank you all for attending, and I will see you guys next week, next Monday. But for those who are interested in my trader psychology live stream, I'll see you guys on Sunday. Have a great day.